Going back to the controversial questions of what happens, the questions people had in the fourth quarter about the Trump presidency and the no-cause evictions and potential rent control. I don't know the answer to that. Your guess is as good as mine. You can Google what does a Trump presidency mean to commercial real estate, and everybody's got an opinion, and it's all over the board. I think the answer, though, on how you insulate yourself is exactly the same for both. And the answer there is, if you haven't buttoned up your property tight now's the time to do it. So with getting rents to where you want them, to doing repairs, if you're going to turn over the building because of tenants, now's the time to do it because the vacancies are low. If you're going to refinance, now's the time to do it. It seems like rates are going up already. If you're wanting to sell right now, there's very few things that are out there in the market. So it's a great time to sell because every buyer will see your property. I'm seeing multiple offers on almost every listing that I've had in the last 6 months. So it's a great time to sell if you're in that spot. And for buying, rates are low too. So that's a quick snapshot in the market. I think those 3 data points, price per unit, square foot, and then cap rate will give you a really good idea what's happening in the market. To me, I've seen a lot of people have sticker shock. I mean, I started this back in 2000, and I remember my first year, there was essentially a big hubbub in the office because Northwest Portland hit 50,000 a door on sales for the first time. And a deal completed, and everybody was incredulous that it was 50,000 market on 50,000 a unit on Northwest 23rd in Irving or something. So that seems like a long time ago. So I think if you can get to the reality, you can help get over the sticker shock when you're out there in the market looking to do your deals. Okay, lenders. It's like the Who song, Won't Get Fooled Again. They said, meet the new boss. It's the same as the old boss. Kind of the same thing here with lenders. Chase and Umpqua are the 2 leaders that are doing the most deals. Opus has jumped up and done a bunch. Some more seller financing deals I've seen this year than I have in a long time, which seems counterintuitive because the rates are low and sellers were some of them were looking to exit the game and carry to contract so they didn't have a huge capital gain hit all at once. And then a bunch of other lenders have at least 3 transactions. So the lending is plentiful. All lenders seem to be they were out of the boat in 2010, now they've jumped back in the boat, and lending is very plentiful in the market. Now here's an interesting piece here for buyer location. This is 100 plus units. Again, this is not necessarily our arena here, but if you look at it, 12% was from Oregon, 88% was from outside of Oregon. That means a lot of money is coming into Oregon, primarily from California, some from Washington. So the Californians are coming in and buying the big stuff. It's a flip side. Under 100 units, it's about 65% for Oregon. So what that means is anything under 100 units is really a local market, not leaning on or relying on foreign investments to prop up those values. So when we look at those values and price per units, majority of those deals are local buyers, which means it's a pretty balanced market. So I think those prices are not hyperinflated, or I think it's a really good indication that those are real live prices. Over 100 though, you've got 88% are from outside of Oregon. So I guess what it means is foreigners, Californians in New York, Washington, they believe in the Oregon market and they're putting money into the market.